And in international news, as the mid-June deadline to raise the debt ceiling looms, U.S. Treasury Secretary Timothy Geithner expressed confidence that Congress would approve an increase in the amount of money the U.S. can borrow. The Treasury predicts the $14.3 trillion debt ceiling will be reached by May 16th. The U.S. government then has about 8 weeks to use emergency measures to keep the country from defaulting on its bonds and other obligations. Just last week, Standard & Poor's threatened to lower its top AAA rating on U.S. government debt. Geithner said it was imperative that politicians agree to a long-range and tamper-free fiscal plan that ensures spending cuts and protects some programs.
And if we are able to legislate a broad framework with these key elements that locks in reforms over a multi-year period, constrains the ability of future Congresses and executive branch officials to live, constrains their ability to live with larger deficits, then we do not need to resolve immediately all the basic choices that still divide so much of the country.
In his speech, Geithner also expressed a warning.
Democrats have to understand that our capacity as a country to finance things Democrats believe in, like education, like a minimal guarantee of protection in health care and the safety net, require demonstrating we can live within our means. And Republicans have to understand, of course, that deficits matter, that they are unsustainable, and they hurt growth left unaddressed. Tax cuts don't pay for themselves.
And over in India, the chairman of the Economic Advisory Council to India's Prime Minister has forecast that the Indian economy will see sustainable growth of 9% in the coming years. He acknowledged corruption as a major setback for economic growth, but that the Indian economy would maintain its growth target in spite of this. However, economists have been trimming their 2011-2012 growth forecast for Asia's third largest economy, citing high inflation, high oil prices and the prospect of high interest rates. And over in Europe, with less than a week to go until Germany opens up its labour market to Eastern Europe, German officials are hoping for a rise in skilled workers. The Berlin government is hoping that skilled workers will fuel its economy, with estimates of around 500,000 needed, especially in areas such as the engineering and healthcare sector. Until now, Germany, like neighbouring Austria, had opted to protect its job market as long as European Union legislation allowed, and both will now be the last countries to grant unrestricted entry to workers from the East. From May onwards, citizens of the Czech Republic, Poland, Hungary, Estonia, Latvia, Lithuania, Slovakia and Slovenia will have free rein to take jobs without long-term contracts or company sponsorship. Some construction and agricultural industries have voiced their concern over cheaper competition and what will mean it for business.
Well, this cannot be compared with 2004 because we had transitional agreements in Germany. Therefore, we do expect not a large run on Germany, but a very small movement, round about 100,000 per year. That is related to the 78 million people in the new European countries, rather small.
Sony revealed late on Tuesday that personal data of its 77 million PlayStation Network users, including names, email addresses, password logins and credit card details, may have been stolen. The company is currently under fire for its late disclosure that the private and security data had been compromised, having admitted that it discovered the breach on the 19th of April. Sony defended itself by saying it took several days of forensic investigation before the company knew the data had been accessed. It estimates that the bulk of its 77 million registered users are from the US and Europe. Sony has advised its customers to monitor their credit card transactions closely and to be aware of possible mail scams seeking sensitive data. That's it for International Business today. Before we head back to news, let's take a quick look at the Asian equity, commodity and the currency markets. And after that, Mona Nasser is back with the news.